Warner Brothers is broke and desperate. Now, that is a sentiment that has been permeating from this once a legendary studio for, God, going on what, 2 decades? I mean, like, how many mergers, how many split ups, how many divisions has this gone through? I mean, like, the one that immediately comes to mind is the Time Warner merger that ended up killing off WCW. And then, of course, when that went down in 2001, that was a massive financial loss. And then somebody else had to swoop in, leading to an even larger financial loss. And the most recent merger with a Discovery being the impetus to this change right here, which we're going to talk about. Warner Brothers Discovery to split into 2 separate companies as WBD, a debt crisis, and streaming woes force a drastic overhaul. So it's so funny, right? Because most companies, hell, anybody that is just about $40 billion, $40 billion with a B in debt, normally, I don't know, man, they'd have to sell their ass, okay? Like, they'd have to go, not just, on OnlyFans, they'd have to go out there walking the street in order to make ends meet. But no. When you're a company like this, okay, when you're so ingrained in the system, you can just go ahead and play little fun shell games to go ahead and move the debt over here. Oh, is it over here? Is it under this cup? Is it under that cup? What's the card? Pick a card, any card. You go ahead. Oh, is this your card? No, it's not. Here, you get $1 billion in debt. You get $1 billion in debt. You get $1 billion in debt. Oh, it's just so wonderful what happens in the world of high finance and the glitz and glam of Hollywood. It can go ahead and obfuscate and distract you from just the open and brazen corruption going on. It's just so wonderful. In a dramatic move that signals the beginning of the end for legacy cable conglomerates, Warner Brothers Discovery has announced its plan to split into 2 publicly traded companies by mid-2026. So yeah, this is something that's going to be taking a little while to wrap their heads around. The announcement made Monday morning, this past Monday, by the way, marks a stunning reversal for the company, once seen as a symbol of a media empire consolidation. Because yeah, you take a look at everything that they have under the umbrella, okay, or under their umbrella rather. Geez, words are difficult sometimes. But no, just the networks that they have, just the traditional cable and network television that they have, TNT, TBS, True TV, God, CNN. If this was years gone by, that would have been a powerhouse in and of itself. And then you take a look at all of the IPs that they can leverage. Harry Potter, Lord of the Rings, the film adaptation rights, the television rights are over there at Amazon. Boy, both of them are just making such great use of that stuff. All of George R.R. Martin's Song of Ice and Fire and just his entire catalog, they got access to that. Mortal Kombat, DC, the list goes on and on. They have banger after banger after banger, and what have they done with it? Sweet with a side of fuck all. It's pathetic. It's been bad decision after bad decision, and instead of blaming themselves and taking responsibility for it, they're just shirking said responsibility and giving promotions and handing out more responsibility. Some of the idiots that helped them put them in this place to begin with. But yes, under the restructuring, WBD will separate into streaming and studios company, led by current CEO David Zaslav. Oh, okay, cool. So the guy who the shareholders just rebuked by trying to get a $53 million pay package, and yeah, him just, getting kicked to the curb. It's like, yo, man, you're that deep in debt and you want to have that big of a take, you can go straight to hell. And so you just had the shareholders say, we don't have a lot of faith in this guy to turn it around, so you should just go ahead and allow him to shepherd in the future with the streaming and studios part of this stuff. Okay. Meanwhile, the bean counter, okay, current CFO Gunnar Wiedenfels, the guy he's kind of the hatchet man when it comes to Warner Brothers at this point in time. Like, if you're paying attention to when the layoffs are coming down, what studios and what divisions get cut, he's the guy with the power. Okay, and he's getting put in charge of the Global Networks Company. Okay, so this is just all fancy talk. This is fancy talk for some whores that ostensibly break down to Zaslav's going to be looking after the future. Weidenfels is looking after the past and the present. So their streaming and studios arm will house Warner Brothers Pictures, Warner Brothers Television, DC Studios, HBO, and Max streaming platform. Meanwhile, the Global Networks business will retain cable-focused assets, including CNN, TNT Sports, Discovery Channel, TBS, and other linear networks. So the stuff that continues to turn a profit. Meanwhile, Zaslav gets all the prestige, brands, and outlets. Makes sense? Sure, man. Zaslav called the move a strategic pivot. Now, Listen to this corporate slop response. By operating as two distinct and optimized companies in the future, we are empowering these iconic brands with a sharper focus and strategic flexibility they need to compete most effectively. I thought it was efficiently, but we don't do anything efficient over at Warner Brothers in today's evolving media landscape. Case in point, yeah, the last shit we tried didn't work. I don't know, we'll just throw we'll throw a bunch of shit at the wall and see what sticks this time around. Should work, and if it doesn't, fuck it, we'll just try restructuring again in a year and a half's time. Okay, good, great. But behind the corporate spin lies a much harsher reality. Warner Brothers Discovery is drowning in debt, stuck between a crumbling cable model and an unforgiving streaming market. Well, I mean, your sports division, it still does very, very good. Okay, you got NHL, you got NBA rights, but the less said about the NBA ratings, the better. I don't really think, the NHL is, doing gangbusters for them over on TNT and stuff. But the only thing that still draws eyeballs on cable television is live sports. Not really doing that much, especially over at Netflix. How you doing with that WWE deal? Don't have any regret on that. Wow, it's almost like it's going to go down as the second worst contract outside of, New York Mets handing Juan Soto over $700 million, but everybody knew both of those were going to be disasters off rip. God damn it, man. Sidebar for a second. I just want to talk about how stupid that Mets Soto contract is. Okay, the reason that Shohei Ohtani got $700 million is because he is an MVP level hitter. I know, twice over the MVP. And he's also a Cy Young caliber pitcher. It made sense to give him $400 million for the position player and $300 million for the pitcher. Totally makes sense. Giving it to Juan Soto, who's never even sniffed an MVP, was a bit part on a one World Series team for the Nationals back in the cut that had prime Max Scherzer and a rotation that could hit a gnat off of a horse's ass at 50 yards. The fuck is Steve Cohen thinking? Oh, that he could just go ahead and buy a team like this is the fucking show and then just put it to the World Series. Just brain dead individual. And lo and behold, what is it? All it took was just a couple of weeks for him to, rest on his laurels and not run out base hits. Fucking hilarious. You would almost think the amount of poor contracts that the Mets are handing out, they would have a silent partner in Warner Brothers. See, that's how we bring it all the way back around. But Warner Brothers Discovery was formed in 2022 when at&t spun off Warner Media and merged it with Discovery Incorporated in a $43 billion deal. The merger was billed as a birth of a new entertainment giant, uniting prestige content television with reality TV, sports, and global news brands. What followed is a mess. Yeah, exactly. Since then, WBD has struggled to reduce debt, grow its streaming base, and navigate a collapsing cable ecosystem. As of the most recent earnings report, the company carries over $38 billion in gross debt, and net debt hovering around $34 billion. That burden has been a persistent drag on the stock and on operations despite aggressive cost cutting. Because, what was that? A couple of weeks ago, we just talked about how its stock got downgraded it was S&P putting it to junk status, giving it a triple B rating or something like that. But then came the ratings downgrade. Okay, yes, in May, right, S&P Global cut Warner Brothers Discovery credit rating to junk status, citing concerns over declining revenues, high leverage, and company's exposure to a shrinking pay TV landscape. According to S&P's report, WBD's leverage is expected to stay above the 4.3 times EBITDA through the end of the year, far beyond the 3.5 times limit for investment-grade credit. The downgrade increased borrowing costs and served as a public red flag to shareholders and partners alike. And then you got the shareholder vote about Zaslav's pay package, and now, after this split was announced, Fitch and Moody's joins S&P Global in downgrading Warner Brothers Discovery. Is really, really not good. Credit rating firms Fitch and Moody's have joined S&P Global in downgrading Warner Brothers Discovery after it reveals plans to split its global networks and streaming and studios business into two separate companies in mid-2026. Fitch downgraded the media giant's long-term issuer default ratings from BBB negative to BB plus, meaning it's no longer investment grade, and the short-term issuer's default rating from F3 to B, reflecting an uncertain capacity for timely payment of financial commitments. Oh fuck, so anybody looking to loan money to Warner Brothers? Don't necessarily anticipate a timely return on on said payment. It also downgraded Warner Media Holdings senior unsecured debt from BBB negative to BB plus with a recovery rating of a R4, and Warner Media senior unsecured debt from a BB plus to BB neutral with a recovery rating of R5. I'll take your word that all of that is bad because it's all a downgrade. I'm not a financial analyst. I'm not a financial expert at all. I just read stuff. The firm said that the move was because WBD would be smaller and less diversified in a secularly declining industry. Depending on the final capital structure, a multi-notch downgrade is possible. So, the slide is not done yet. And I would imagine, right, because internally and also externally, we kind of know that Superman is going to be a big ting for Warner Brothers, especially for your studios and streaming division, okay? Its success at the box office is obviously going to have a knock-on effect when it ultimately does go to streaming. But if it's not a big hit at the box office, obviously you have Minecraft to fall back on, but the future of the Minecraft franchise, I mean, like, you already cashed that check. I don't know how many people are coming back for another chicken jockey or a lava chicken meme. That was a really bad movie. I don't think anybody who went and seen that film in May even remembers it now that we're in June. So the potential for the Minecraft cinematic universe, I don't quite think that has the same legs that a DC universe could have. So if Superman isn't great, oh boy, another downgrade isn't likely. It is just about as secured as David Zaslav getting sacked the same time as James Gunn if he puts in too many unfunny jokes, tries to make Superman Guardians of the Galaxy. We already knew that a lot rides on July. We just didn't realize how much rides on the success of Superman this July. So with all that said, thank you all very much for the gift of your time. I've been Don Consuelo. I want you to follow your gut and get after it. Take care, everyone.